Hi, I'm Keith Taylor, and today I want to talk to you about what to do if your car is totaled and the insurance company is only giving you less money than you owe on the vehicle. Every year in America, about 23 million vehicles are damaged in car accidents, and 85% of all new cars purchased in the United States are financed. When the person finances a vehicle, a lien is placed on the vehicle. That is usually a first position lien, which means that if your car is totaled, the lien, the financing, the bank, the lending institution has to pay off that loan before you get any money. In the state of Florida, a car is determined to be a total loss if the cost to repair it, together with the salvaged value, that's the value of the vehicle as it is, if that is at least 80% of the actual cash value of the vehicle, then it's declared a total loss. And you are then entitled to recover the actual cash value of the vehicle. Now, depending on how recent you made the purchase or how much you financed for your purchase, you may find that the amount owed on the vehicle is actually more than the actual cash value or the amount that the insurance company is willing to give you for your totaled vehicle. Now, we have another video on how to get the most or more money for your wrecked car. Be sure to check that out for some pointers on that front. Now we're talking about the decision that's been made that the vehicle is totaled and you're in this sort of upside down position. You don't have enough money. So even if you're not upside down, your loan is still going to be paid off first. The insurance company will have to pay to the lender directly. And that may only leave you a little bit of money to go and find a replacement vehicle. Worse off is where there is no money to you because the loan exceeds the actual cash value of the vehicle. And that's a big problem because just because the insurance company pays the car was totaled, that doesn't mean you don't still owe the lender whatever the balance may be. For example, if you owed $12,000 on the vehicle and it was declared a total loss and the value of the vehicle was $10,000 and the insurance company pays your lender $10,000, you're still on the hook for the other $2,000 owed to the lender with no recourse going against the at-fault driver because you're only entitled to recover the actual cash value of the vehicle. It's a real bad problem. So your options include you could keep paying your monthly payment even though you don't have a vehicle. That's a real tough position to be in. You could talk to the lender, see if you could get forgiveness or adjustment because of the hardship that you're in. And you could consider rolling that extra amount into new financing on a vehicle. This is one of the things we find that often puts people in this negative equity position, this upside down position, is by trading in vehicles that didn't have the value that had that equaled the loan on them. That loan gets rolled into a new loan on a new vehicle, which causes that vehicle to be further upside down. And then if you have a wreck in a short amount of time following that, it's just impossible to recover from that situation. But it is a method to try to recover from an upside down situation when your vehicle is totaled. None of those options are great. And this applies whether it's against your own insurance company under a collision coverage or it's under the other driver's insurance policy under their property damage coverage. This still applies regarding being upside down and compared to a total loss situation. You do have one option that you have to do ahead of time, which is to purchase GAP insurance. It's an optional insurance coverage. Some lenders require it. Some lenders really push it when you're taking out the loan to get the vehicle. And it's an additional cost. It's an insurance. And what GAP insurance will do is pay any difference, cover any difference between the actual cash value and the amount that you owe. Now, you'll still end up in that situation coming out with no vehicle and no money, but at least you're not still without having a vehicle and owing money. The gap insurance would cover the gap, or that difference between the actual cash value and the amount of your outstanding loan on the vehicle. I hope you enjoyed the video. If you did, hit like. Don't forget to subscribe to our channel. We like to turn these videos out regularly. And if you have any questions concerning motor vehicle crashes, car insurance, or any other legal questions, please drop them in the comments. We're happy to try to answer those questions